Hello traders and welcome to another video review. Today is Monday, November 11th, 2024. Let's find out what do we have in the economic calendar for today. Japanese data dominated the Asian session. Adjusted current account and the current account, unfortunately, a worse than expected forecast of 2.8 trillion yen, with the actual number of 1.27 trillion, and current account is 1.71 trillion, way below the forecast. Inflation expectations in New Zealand are just marginally higher than the previous number, 2%, with the actual number of 2.1%. Eurozone McCaul will give a speech 9:10. Then we have the little gap until then 7 o'clock. German Buba Balz will give a speech, and at the end of the day, electronic card retail sales from the New Zealand will take place. This event is scheduled for release at 11:15 p.m. So as you can see, this is one of these days which is absolutely a non-event day. So easy Monday, very easygoing Monday, not too many data releases, even the low importance one, as you can see here. So let's just better switch to the technical part of this review, and let's take a look at the charts. We'll start as usual with euro dollar. 4-hour chart of the euro dollar. Since the low of 1.0683, we got the low of the wave A, of course. Then we have a high for the wave B, 1.0825. We will trace just over 50% of the last wave down, wave A, yes. And then what do we have? A hangman confirmation extension to the downside. First low was 1.0688, some kind of a pullback, and today's we have a low at 1.0679. So the wave C unfolds on the euro dollar as expected. No big deal here. This is how it looks like without the Fibonacci retracement levels. However, we don't see any kind of technical resistance. Maybe the lows of this candle might be a little bit better technical resistance for the bulls. So now what do we do here? We would likely see another extension to the downside, possibly towards the level of 1.0672, 1.0665, 1.0650. Ultimately, we can see even the level of 1.06. Okay, so this might be the next target for the bears. If we try the trend-based Fibonacci extension just to find the projection of the target for the wave C. So we got the wave A here. The wave B is here, right, the top. So the projection, one-to-one projection for the wave C low is, as you can see, 1.0571. So we might even break in that projection, in that scenario, basically. Okay, let me just move it here. There you go. We can even break below this technical support and go lower towards the level of 1.0571. So that would be then perfect market geometry. 100% of the wave A measured from the top of the wave B is exactly the target projection for the wave C. There is still the room to the downside, however, it's not that much. So before we will hit this level here, if we ever, by the way, we need to break below this technical supports. So maybe some sort of the local bounces will take place anyway. However, the outlook for the euro dollar remains bearish. The other major on this Monday morning will be, of course, the British pound, and the British pound, as you can see, doesn't actually like this channel anymore, so let's remove it. Doesn't actually do any new lows because now we are close in this very tight area here between levels of 1.3045 and the lows of 1.2843, 1.2835. As you can see, momentum is still going a little bit higher. What I mean is that there is still a divergence between what is momentum doing and what is the price doing, right? So if there is a up move or up spike, some sort of the very decent dynamic, aggressive movement, we might see all of these technical resistances to be broken very, very rapidly, right? So please keep an eye on this consolidation here. It looks like the market wants to move lower, because right now, as you can see, the RSI is below the level of 50. Now it's around the level of 42. We might see the test of 1.2833 soon, which means that the outlook for the cable is bearish. Another measure is US dollar to the Japanese yen, and despite the poor Japanese data, we are still looking at a rising market. Just recently we almost tested 100 periods moving average. Now we broke below above the 50 periods moving average, targeting the 154.71. The next technical resistance momentum is at the level of 58 points. It's strong, it's positive. US dollar versus the Japanese yen should make another higher high during this this up move. So that was very quick and simple. So let's just take a look in that situation on the US dollar index. What is the US dollar index doing? Let me just find it. US dollar index. There you go. US dollar index is on its way to break above 105.41, the swing high from the November 6th. Current level is 105.31, so it's only roughly around 7 pips away from the highs. If the high is violated, of course, then the uptrend should continue up to the extremely overbought conditions. Please remember that we are still trending very, very strongly all across the board here on the US dollar. Let me just mark this level here. There you go. And the momentum is still strong and positive, and just recently bounced from the level of 48 points. So almost perfect bounce from the level of 50 during this 50% retracement, and the uptrend is being resumed. This is the indication of the healthy market. This is the indication that the bulls are in charge of the US dollar. The US dollar is being bought across the board. Even if we switch on a daily, you can see there is still the room to the upside here. Big candle that was made here is poised for the another movement to the upside towards 106.10 and 106.47. Those are the next targets for the bulls. I'm just wondering if there is any opportunity for any trend line here. There you go, very nice trend line. So if this trend line I just found is violated, clearly violated, dynamically, aggressively towards 106.41, we have a very nice bull market going on the US dollar. Next target, eventually next target, is this swing high from 2023, 107.32. For now it looks very, very bullish to me. As soon as we break above the trend line, the uptrend is confirmed. So last but not least, the king of all recent trades, the king of all recent assets, the Bitcoin. Bitcoin is at the all-time high, just trading above the $80,000. Local high is 81,931. So the market conditions are extremely overbought already, but Bitcoin doesn't care. Doesn't care at all. We haven't seen this kind of a overbought conditions since, there you go, somewhere here, March 2024, right? So March 2024, 89 points. November 2024, 77 points. There is still 10 points for the Bitcoin to go. By the way, if the market is trending so strongly, it might indicate that this is a trending market, apparently, not only the oscillating market from extremely overbought to extremely oversold. Now on my 4-hour chart, we run out of the current situation with the Elliott wave, because the corrections are so swift and so short that we need to relabel our count, it looks like this is the top for the wave 5. Very short correction, 1 2 3 4 5, another 5 wave extension to the upside. So right now this is a very good example of the calculation of the Elliott wave. Since the ABC running correction, very nice movement towards the all-time high, very deep retracement, and the blast off, almost vertical blast off, including the momentum, as you can see here, towards, of course, extremely overbought conditions. Next target for the market, 82,000, no, 81,931, then 82,000. Of course, plenty of people is talking about the $100,000 target. Obviously, with that kind of momentum, with that kind of attitude, is absolutely possible in the future. Let me just take a look at the weekly time frame chart. Well, you can see on the weekly that the weekly is overbought, but it doesn't actually matters, because last time when it was overbought, then we have the roughly about 6 weeks break and then another all-time high. So this situation might result in a surge towards 100,000 US dollars, then maybe some sort of the consolidation, maybe some sort of the correction or a pullback, and then movement to the upside. But please take a look at this weekly candlestick here. This period here, we got over 6 months, 7 months actually of the correction. So the market was bored, market was basically trending nowhere, moving sideways, until the bulls decided to do something about it, right? So maybe there was some fundamental trigger for this. Actually, maybe not. Maybe it played a major role in this situation, maybe not. What we know now is that we have a very big weekly breakout candle, and the bulls doesn't want to stop for now. There is no indication this trend is about to stop or pause or reveal reverse or make a pullback right now, until some major level will be hit, just because this period of the consolidation took so long, 7 months or even a little bit longer, right? So please be prepared for another surge in terms of the bull rally. First major, obvious, popular target for the bulls, $100,000. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.